Hi everyone, I'm Vendik and you're welcome to my channel. Today we will discuss fair value gap. Alright, so before we jump into it, please don't forget to do the YouTube business. Alright, so just share, like, and then you comment. Alright, okay, so without further ado, let's get into it. Fair value gap is a price movement that occurs when there is an imbalance between the buyers and the sellers. Okay, so that's what is fair value gap. Imbalance is what creates what we call fair value gap. Let's just jump to the chart. Let me show you. As we've explained, that a fair value gap is a price movement, all right, that occurs when there is imbalance in the market. Okay, when there is imbalance between the buyers and the sellers. Okay, so all right, let me just open it up so that you see what I mean. Okay, so this is an example of an imbalance, all right, or a fair value gap, right? There is a gap between the previous candle and this other one. There's a free space here, all right? This free space here now, all right, that market has not balanced is what we refer as a fair value gap. Okay, when there's a drastic movement in the market and the previous market is unable to fill up that drastic movement, all right, it is called fair value gap, and that happens because of imbalance in the market. So market always rebalance its movement. Okay, um let's say, okay, let me say this. Okay, this is a candle. This was a drastic movement too. So the previous candle balance, if you look at it very well, there's a week. Okay, this week now, this particular week and the week of this one balance each other. There is no space. All right. Okay. This one too and this one, there is a space here between this. This was the previous week where it ends, and this was where this one ends. All right. So there was a fair value gap there. That was why this red candle come inside here to rebalance it before the market goes up again. So fair value gap happen so many times in the market. So there are some of them that are not relevant. Some of them is not things we should look at too. All right, but it always happens. So when market drastically move, okay, it leaves some gaps. So those gaps, naturally, it's meant to balance it up. So some of them will be filled up, some of them will not be filled up. All right. So that is exactly what imbalance is. So if you open up charts, all right, just go look at it candle by candle. You actually identify this with the little explanation I've shown you. All right. So there are gaps, there are fair value gaps that we will consider valid one. Okay. Sometimes from a support zone or a resistance zone. In our previous episode, we talk about always being in line with the flow of the market. Every strategy we discuss in this chart, okay, over the years, I've noticed that if your strategy is in line with the flow of the market, you tend to have higher probability win rates. Okay, so you can be trading off this alone. All right, so trading a fair value gap plus a direction of markets plus a fair value gap, maybe if you apply support and resistance, all right, you've already become a price action trader. Okay, you've already become a price action trader. What that means is that there are so many concepts in the market. So if you apply these concepts, join them together, it gives you higher probability of being successful in each trade that you take. All right. So a fair value gap is a vital part in trading that we supposed not to overlook. All right. So this is how it is. So there was a fair value gap here. Okay, you see this one is supposed to be a fair value gap, but it is not because this particular candle balance it up. So we have a fair value gap here. So which later the market balance it up and then move to its original state. So there's another fair value gap here. The market comes in, all right. I think it has not balanced it up, so but it moves up. But it tried. So market always come back. Okay, this was a trade I took yesterday. All right, so it just came in and balanced it up and boom. All right, I saw that impulsive move and then we are good in that. So any sort of instrument that you are trading, no matter the time frame, no matter whatsoever you are trading, you will always find this a fair value gap in it. All right, so another thing is that you consider the flow of markets. All right, I'll find a means where I will explain, okay, how to identify a flow of market, maybe by indicator or something. Okay, so the market is obviously on an uptrend. Okay, so this is what I mean flow of market. So I can't be selling at this level on GBPJPY. All right, I can't be selling. Okay, so all what I'm looking for is a buy opportunity because the flow of the market is upward. So I can't be looking at selling anything. So any instrument you are looking at, all right. Okay, let me. Okay, this is gold. All right, gold, same thing. All right, these are all fair value gap that got balance. Okay, if you just look at it, you okay, these were all fair value gaps. So the next rebounds on this gold. All right, if gold comes back, whatsoever brings gold, okay, at once, if gold is able to get back, I know there will be a whole lot of zigzag job, but when it gets back to here, there must be a reaction. All right, there must be a reaction to the upside. There must be a reaction to the upside. Okay, so if gold gets back to here, there must be a reaction from this fair value gap. You know, it has not been balanced, so there must be a reaction from here to the upside. So this is what happened. It doesn't matter the instrument you are trading. Okay, whatsoever euro, USD, whatsoever you are trading, I'm not a fan of this pair. Okay, but whatsoever you are trading, you will always have um, an imbalance. Okay, I think this was a clean one. All right, this was a clean one. In London section, I think so. Okay, let me just point it out. If you look at here, you have a clean imbalance here on this candle. The markets rebalance it very clean. Okay, this is one. This one here is an imbalance too. Okay, this is an imbalance from here to somewhere here. Okay, so if you zoom out, all right, okay, we have higher probability that it might come back to balancing. Okay, so you mark up all these stuffs. Okay, this particular place now, if you go back and check it out, you will see that there is an imbalance around here. Okay, like this one, fine. Take a look at this. There is no imbalance here, there's no imbalance here, there's no imbalance here, there's no imbalance here. Okay, so this was a clear states that okay, the market has moved. Okay, we might not have any reason of coming back to this zone. Okay, the market just took off. All right, so those are just the little things you need to put into consideration. Okay, I think this explained a fair value gap for you. All right, so if you found this tutorial useful, don't forget to leave a thumbs up, and then you can comment and share the video so that more persons will get to see it. All right, and it will really help us to grow, and then for me to create more content for you like this. All right, see you in the next episode. Peace out.